Welcome to video number, I believe, 4, which continues with preparation of financial statements and introduction. And in this video, we are actually going to prepare the statement of financial position as per this format. I believe you are watching this video after watching the previous one where I illustrated how to the format for preparation of financial statements. So the first thing you want to do when preparing a statement of financial position is get the name of the company and then get the date for which you're preparing the financial statement for. So I've done exactly that and I've written them down. So it's 4th IR and we're preparing a statement of financial position as at 31st December 2014. Pay attention to the wording there. So a statement of profit and loss is prepared for the year ending, while a statement of financial position is prepared as at. So let's get back to our statement there and try and prepare it. So like we discussed, the first part of the statement of financial position is going to show our non-current assets. And for our non-current assets, we are going to try and get our costs, initial cost of these non-current assets. Then we will get our accumulated depreciation, I'll write it in short. Then we're going to get our net book value. So when you go to the question, what you're going to see is, as you scroll down, look for any non-current assets that you could have. I think we have land and buildings. Is that correct? Okay, we have land and buildings at 100 million kwacha. So the initial cost of our land and buildings was, we need to put the millions on top there. So the initial cost was 100 million. I've already read through the question and we were not given any information about depreciation, so we can presume that there's no depreciation, so this will be 0. And if you subtract this and that, you get 100 million kwacha. The next kind of asset that you can think of, so this is land and buildings there. The next asset that you see is furniture. And we also have motor vehicles, so I'll just list those up. So we have furniture and motor vehicles. And motor vehicles. Furniture and motor vehicles. So for furniture, it's 30,000, and for motor vehicles, 21,500. So 30,000 here and 21,500. Again, there was no evidence of depreciation. You can go check the question again. So we have 0 basically on those. You can even put those there, and that will give us 30,000 here and 21,500. When we add all those up, should give us a total of 151,500. Just get your calculator and run through those to confirm. Once you list your non-current assets, you can go on. Actually, I can even close this up. So this is 0 and that's 151,500. So that when you subtract this, you get that. When you get your total non-current assets, you can then go on and find your current assets. So when you go to your question, your current assets include things like your inventory, your payables, your inventory, your receivables, and your cash. So our inventory there, the inventory that we choose is not the opening inventory, it's the closing inventory. So you get your closing inventory of 16.3 million, your cash of 125, and your receivables of 23,850. I'll just go list those up. So we have inventory or stock totaling 16,300, 16.3 million. Notice we dropped the zeros because we have the zeros on top here. Okay, then we're going to have debtors, also known as receivables, of 23,850, and then we're going to have cash of 125. That gives us a figure of total current assets of, I believe, 40,275, 40,275. Just get your calculators and confirm that for me. If all that is correct, what we need to do now is add our current assets and our non-current assets, and that will come down here. So if you added your total of your current assets and your non-current assets, you would have 151,500 and 40,275, giving you a total of 191,775. So 191,775. So this figure will be very important. We want to make sure that it matches with the total of our capital and our equity and our liabilities. So for the equity, we're going to have our capital, and the total of our capital was 136,884. So 136,884. We need to get our retained earnings or profit that we've retained in the company. So if you look through there, we don't have any capital retained at this moment, but if you check our other video on our profit and loss statement, you will realize that we had made some profit, and that profit was coming up to 42,850. You just need to refer to that video. So retained earnings, so the profits we have made so far since we started was 42,850, and that will give us a total equity figure of 136,884 plus 42,850, which gives 179,900. 179,734. Then we need to get our liabilities, and it looks like we only have current liabilities. When you look at the question, our current liabilities are accounts payable of 12,041,000. So just say accounts payable or payables of 12,041,000. The figure coming from right here. If we add those up, it will give us our total equity plus liabilities. So let's confirm that. So 179,734 plus 12,041. This gives you 191,775, which is the same as this one, and so we have balanced. So that's how you prepare your statement of financial position, and of course you don't have to have those things in red there, but basically this is how you do it. Thank you so much, and we'll see you in the next video.